Morgan Stanley came out today. Bank of America.
Bank of America.
Everything is great on Wall Street.
The morning started so good. I mean, pre the open, when the earnings first came out, Morgan was up 6%, Bank of America up over 3%. Where did it all go?
Where did it all go? You're the bank guru. Where did it all go?
At first, it fizzled as the day went along with the market, and we saw, the market go into the red, and a lot of the financials did. Even Bank of America now is trading to the red now. The only one holding its gain is Morgan, which is up about
a whopping percent and a half.
Hey, for a day like today, that's not too bad.
But it is. But let's step back and let me first posit the following, which is a number of years ago, say 2007, as the banks went, so the stock market went. Do the banks matter anymore to the stock market?
I think they do, because if a sign of how is the economy doing, or you're seeing loan demand. But the market has learned to move on. The banks are not the engine on this train anymore.
Now, Morgan Stanley came out with results today.
Yeah, they're good results.
Generally well regarded. We discussed earlier the return on equity wasn't too great. I mean, it was still sub 10%. It's all relative,
It's
right?
9.2% in this quarter. That compares with, for last year as a whole, 4%. So it's relative.
Yeah,
that's a lot better than 4%. But to your point, it's sub 10%, which people largely see as being their cost of capital. So they're going in the right direction, but they're not there yet.
Right. Right. Now, banks, did Mr. Gorman, the CEO of Morgan Stanley, or Mr. Moynihan talk at all about compliance with the Volcker rule, which apparently they now have to be in compliance by July, which is strange. I don't know how anybody's going to be in compliance when the thing hasn't been totally set yet.
That wasn't a topic of conversation on the call for either Morgan or Bank of America. What was more a topic on the call from Morgan was the question of how hard might they be hit if Moody's downgrades them over the next month or two.
Right, and he obviously gave some satisfactory answers to that.
I think that they clearly acknowledged there's a concern there, and they were just trying to say, here's our options for dealing with this. And I think what they're also hoping, and James Gorman even came out and said this, is that Moody's now has two new data points. One, the Fed stress test results, but the second being these first quarter earnings. So I think Morgan is really hoping that the strong showing today will help it argue its case to Moody's.
Is the fact that the bank stocks, and in particular the Wall Street banks, Morgan Stanley, Goldman Sachs, are not up big today, even though earnings were very good, is that because Wall Street now is a total black box? Is that because
has Wall Street ever not been a black box?
Well, but even now, we talked a little earlier, and I was like, well, the perception, the media spin is, well, Morgan Stanley outperformed Goldman Sachs, and then I asked you, well, why or how, and you didn't have the answer.
I don't
think
have
anybody
an answer.
has the
I don't
answer.
think anyone does, unless you're inside the firms. And even then, do you know exactly what's driving the result at Morgan or Citi, JPM? No, I mean, there's a huge divergence between Morgan's result on the fixed income trading side, which is so key, and Goldman's. And you look at that, and I think a lot of the analysts on the calls were sort of scratching their heads saying why, and you don't get a clear answer on that.
And the net result is, at the end of the day, investors are reluctant to pay up for these banks. And so, we were joking before, James Gorman, a number of his senior lieutenants, I think it was last year, around this time, maybe a little earlier, went out and they bought, a few $1,000,000 a piece worth, or, a lot of their own stock. And I think he bought it at $21. And today he had great results, and his shares are below 18.
Right, and I'm going to say it before you do, he bought at 20, and I wrote a column, I think it was after the second quarter results last year when the stock was at 24, which was pretty positive on it. So I've done even worse.
I don't remember that. But I'm glad you reminded me.
Into my memory.
I'm glad you reminded me of that. If you're an investor and you're looking at this, they're trading, I don't know, Morgan Stanley's probably trading 3/4 of book value thereabouts.
No, not even. They're only at about 67% of tangible book.
So are investors, are they so skeptical of, in particular, the Wall Street bank stocks, that even though the economy is doing okay, even though the banks are delivering decent profits, even though the prospects for the U.S. economy appear to be improving, that they don't want to touch these stocks?
I think there's still a lot of suspicion, still a lot of avoidance to the financials. I mean, think back just a couple of weeks ago when Jamie Dimon, the head of JP Morgan Chase, came out with his annual shareholders letter. He devoted 2 pages to talking about why it's okay to own bank stocks now. If you have to be making that argument, I think that tells you, just how much hesitation there is in the market toward the sector.
What could fix Morgan Stanley stock or Goldman stock, or certainly some of the bigger banks like Bank of America stock? Is there any quick fix, or is this going to be a grind?
No,
They're going to grind it out.
There's 3 big factors, if I will. The first one is that Europe gets fixed, and we know that's not going to happen quickly. I think the second is that you get the sense that the U.S. economy is definitely, in for a strong rebound. And by strong, I mean what we're seeing right now, that you want to see 3% a year growth, the unemployment rate really dropping, lending demand increasing. That's not going to happen quickly. And the third thing, which is really important, and it goes in tandem with the economy strengthening, is that we get out of the zero interest rate environment. That is a huge headwind for banks, whether it's their traditional banking businesses or their Wall Street businesses, or in Morgan's case, their brokerage business.
David Reilly, we're going to come back on the bank question. I bet you these guys get paid at the end of the year. I have a feeling whether or not the stock Morgan Stanley goes up over 20, they'll somehow end up with a Christmas bonus pool that's quite nice.